Hey guys, what's happening? Hello. Welcome to SDIRA Live, where we talk all passive wealth, offering free education and industry news and alerts on what's happening out there. Are you ready for a self-directed IRA? Do you have one yet? Man, self-directed IRAs are blowing up right now, and 2018 is going to be the year that people start understanding what they are and start moving their money into them. Most people assume that an IRA can only be kept with large brokerage firms like Fidelity or Vanguard, and that the products or investments you have to have in these accounts, self-directed IRAs, must be what the company offers, but that is not the case. Self-directed IRAs offer people the chance to self-direct their funds and investments, such as real estate investment trusts, commodities, precious metals, tax liens, and a host of other options. In doing so, investors can have more control over their retirement accounts, and that can be really, really good. It can offer some great advantages if you do it right. Some accountants say the IRS views self-directed IRAs as a hot topic, which is why most professional tax preparers won't recommend them. Most wealth advisors won't. If you have a wealth advisor you've been with for a long time and you don't have a self-directed IRA, it's most likely because your advisor doesn't either, one, understand them very well or believe in them. And that's scary. If that's the case, guys, do some homework, because self-directed IRAs are incredible. It's an incredible vehicle to help your portfolio, and you need to look into it. First and foremost, an IRA is a tax-advantaged retirement account, meaning it's untaxed until the individual starts withdrawing money, either voluntarily or mandatorily. Taxes are paid on the amount withdrawn, same as a 401k or retirement account. A self-directed IRA modifies these parameters a little bit. It allows owners to operate a tax-free business inside the retirement vehicle, giving them an advantage over other small businesses that pay taxes on income and denying the federal government its share of the profits. Now, legally, I think everyone is pretty well satisfied with how much they have to give Uncle Sam. I don't think anyone really wants to give any more. A self-directed IRA is a great way to save a lot of money on what you're giving the government. Why should someone with an IRA be bound to a broker, limited by the broker's investment options, and have to pay a commission to that broker? This is something I ask myself, and I ask a lot of people all the time. Why are you gonna use somebody that's making money off of their recommendations to you, that's making money off of your money? I know that traditionally that's how things worked in the investment world, but that's not the case anymore. And if you're one of those people that are in that mindset and are still doing that, you need to look outside of the box here, because self-direction eliminates that middleman, that individual or that company that's recommending where you put money for them to make money. They're making commissions off of where they tell you to put your money. And in most cases, I'm sorry, but if I'm selling you or recommending you an investment and I'm going to get paid on it, and I have investment A, investment B, and investment C, and I make $1,000 on A, I make $2,000 on B, and I make $5,000 on C, well, I'm going to recommend that you put it into C, because I want to make some money too. Think about that. Does that mean that C is the best for you and your family and your portfolio? No, not at all. But that happens all of the time, and that's a problem. Self-direction eliminates that middleman. Now, there's a counter to that. Well, I don't exactly know what I'm doing, and that's why I have a wealth advisor, and that's understandable. I get that. Um, Here in 2018, self-direction, this industry is blowing up, and there's going to be a lot of free education out there. There's going to be a lot of shows like this. There's going to be a lot of websites. There's going to be a lot of interactive learning sources where you can go and learn about self-direction and do this yourself. I urge you to start learning about it, because you're going to save a lot of money, and you're going to be able to invest a lot more, and you're going to see higher returns by doing it yourself. If you have any questions about self-direction, the first place you should go to is this show right here. Follow this show. Follow our Facebook page. Frequent our website we're going to be posting daily clips on education for self-direction. This is a great place to start learning. If you have any questions you want to ask me directly, feel free. Email me. My email is john@johncop.org. Visit us, SDIRAlive.com, or go to the SDIRA Marketplace, where you can view ratings and reviews on custodians and investment companies that offer investments, and start your education. Start learning about self-direction. It's huge. It's gonna make a huge difference in your world. Who out there has recently made the switch in the last year or two to self-direction? What's your story? I'd like to hear from you. I'd like to hear what made you switch. I'd like to hear how it's going for you. The positives, the negatives, the advantages, the disadvantages. Are you going to keep going? Are you going to switch back to what you were doing before? I would love to hear your stories. These are the stories we need to get out to those that aren't self-directing yet, that need to start. So let's help get those stories out. Get a hold of me, john@johncop.org. An internet search for self-directed IRAs won't take you to any major brokerage house websites, and that's for obvious reasons. The potential for major losses, as well as client lawsuits, and the fact that the IRS closely scrutinizes these types of accounts, has these big firms very tight-lipped about this stuff. It's starting to come out more and more, but they don't promote it much. And again, it's a hot topic right now. It's very hot. The only companies out there that handle self-directed accounts are called custodians. And unlike brokers, custodians don't usually offer advice, but they simply hold the money and manage it and hand it out according to the account owner's request. Many of these custodian firms advise you to find an attorney to familiarize yourself with setting up IRA accounts to avoid financial or legal missteps. Attorneys and custodians can be found at SDIRA.org. The listing directory there that lists all the attorneys and custodians in the space. It lists ratings, reviews from real investors like you. Take a look at it. It's an awesome website for self-direction, SDIRA.org. And we'd love to hear your feedback on that site for any of you that have not been there that now are going to go there. Love to hear what you think about it. Self-directed IRAs have to be kept separate from any other investments, whether a retirement account or otherwise. And no portion of it can be used to invest in another business or venture, like a restaurant or a home for yourself, or can it involve family members? If you inadvertently make a mistake, the entire self-directed IRA becomes taxable. And if it's terminated for any reason, the custodian is likely to charge an additional fee. This would be referring to prohibited transactions, which there is a whole book of prohibited transactions for self-directed investing. And if you're interested in learning more about those, follow the show. We're going to have several shows and episodes and segments on prohibited transactions. There is way too many to list now. But you want to make sure if you are investing with a self-directed IRA that you are not breaking prohibited transactions, because the IRS does not like that, and you will lose a lot of money and a lot of your profits. So don't make that mistake. So are you ready for a self-directed IRA? You should be. You should be. Let's get you a self-directed IRA this year. Get some money in it and start investing in some good vehicles like real estate, precious metals, notes, liens, mortgages, cannabis, Bitcoin. There's a long list. There's pretty much anything you would want to invest in, you probably can. There's a short list of things that you can't. But get yourself a self-directed IRA. You want information on where to start? Go to SDIRA.org. Feel free to email me, john@johnkopp.org. We can find you a custodian that's right for you, and we can find you an investment vehicle that's right for you, and you can get going. You can be set up and have something in your portfolio within a week or two. It's fast, it's simple, and it's passive. You don't do anything. You see your monthly statement every month, and that's it. It's fantastic. All right, this is a great article that I read by Millennium Trust Company. It came out today. I'm sorry, it came out yesterday. It's titled "Time to Talk About Alternative Assets," and this is a great article because they approach the issue of wealth advisors not talking about or offering or recommending alternative assets and self-directed IRAs to their clients. And I see why they do that. I mean, they're not going to make any money off of their clients going off and self-directing their investments on their own because that's basically cutting out the middleman, right? But we're gonna tell you about that stuff because you should cut out the middleman. You should be getting higher returns, and you can do it all on your own without them making money off of you. So I'm glad Millennium Trust released this article because it's a strong talking point that needs to continue to be discussed until wealth advisors start properly educating and talking to their clients about what they should be doing with their money. When advisors discuss potential investments with clients, they often focus on traditional options like stocks, bonds, and mutual funds. As their research shows, however, many high net worth investors are interested in alternative investments such as hedge funds, private equity, real estate, commodities, marketplace lending, and crowdfunding. For example, 63% are moderately or extremely interested in investing in real estate, and 46% report the same level of interest in private equity. But when it comes time to discussing those investments with their broker and advisor, the numbers are significantly lower. Just 25% have discussed residential rental properties, 20% commercial rental properties, 23% real estate investment trusts, and 27% real estate limited partnerships, whereas 38% have discussed private equity. Basically, it's not being talked about much. Even when a client expresses interest in alternatives, wealth advisors aren't talking about it. Whether they're dodging it one way or another, or they're just saying, "Hey, I don't advise you look into this for one reason or another." It's not being talked about. And that's scary. You guys should be talking about it. And if your wealth advisor is not going to talk to you about it, then it's probably time you move on from your wealth advisor. Sorry to say. The gap between investor interest in alternative investments and the level of discussion surrounding them presents an opportunity for advisors. Conversations about alternatives have the potential to deepen advisors' dialogue with clients, adding value to the relationship for both parties. If advisors would just, and it's going to have to happen this year because of how strong self-direction is coming out this year. This is going to have to happen. Either your advisor is going to have to embrace self-direction and alternative assets, or they're going to have to start finding new clients. I think that's what's going to start happening here because self-direction is coming out hard, and clients start asking about it. You don't really have a choice. You either need to approach it or you need to figure out a different game as an advisor. It's interesting. One reason advisors may shy away from these discussions is a misconception of alternative investments are too risky or inefficient. In reality, however, these investments can enhance returns and add valuable level of diversification to a portfolio, helping to decrease the impact of volatility and provide additional opportunities for tax-deferred growth potential. These accounts, self-direction, alternatives, especially using real estate, the leverage and the things you can do are just incredible. And to completely just bypass and look over the opportunity you have with it is just, it's a bad move. It's a really bad move. Real estate and commodities, for example, have a low correlation with other asset classes, which means that they can serve as an important counterweights in portfolios when the stock market is down. Hedge funds and private equity, meanwhile, provide opportunities for substantial growth potential on top of more traditional equities. Just as important for many advisors is the fact that the process of investing in alternatives is becoming easier and more accessible and more widely known. People are talking about it like we're talking about it right now. A new wave of investment platforms is providing straightforward access to alternative asset classes, allowing advisors to bypass the complicated paperwork that deterred some from making the leap into alternatives. For example, advisors can now access vehicles such as private equity, which were once only available to large institutional investors. So, it's becoming a lot easier. One example is SDIRA.org. This is our site. You can go there and you can browse all the available investments that are available to self-directed investors. There was never anything like that. This is the first. It's the first of its kind. If you want to invest in alternatives, you have a self-directed account. Even if you don't have a self-directed account, you can go to that site and you can get one. It's as easy as clicking a few buttons, picking a custodian, picking an investment that you want to invest in, and that's it. And within a week, you're turning cash flow. You've got an investment in your portfolio. It can't be much easier than that. It can't. And that's what we're doing here. This is cool stuff. This is really cool. Some advisors and individual investors may be unaware that the alternative investments can play a role in tax-advantaged retirement accounts like IRAs and 401ks. Millennium Trust research shows that even investors who own alternatives in brokerage accounts or other vehicles tend not to own them in qualified accounts. They don't even own them in the right accounts they're supposed to get all of those advantages. Man, there's so much education that needs to be done here. People need to understand how this works. With so much wealth being transferred to millennials over the next several years, now is the time to commit to alternative investments. Younger investors seem more comfortable with alternatives than previous generations, so ignoring them in favor of more traditional assets may limit advisors' abilities to serve their clients in the future. Advisors are going to have to switch it up, or they're gonna go out of business. So alternative asset investing is the wave of the future. It's coming in hard here in 2018. That's what SDIRA Live is all about. That's what we're here talking about. If you have any more questions, feel free to shoot me an email. john@johnkopp.org. Also, go to SDIRA.org. This is the SDIRA marketplace where you can view listings of custodians and self-directed attorneys and asset providers, and you can view available investments to put in your SDIRA. It's pretty cool. Pretty cool. So, oh man. So with this Bitcoin craze, this crypto craze, there's a lot of new currencies popping up. Right? There's no longer just Bitcoin. How do you know what currency is gonna pan out or not? This is interesting. Have you guys heard of fantasy market? It is a cryptocurrency that was supposed to be released by a guy named Jonathan Lucas, and he's generated millions and millions of dollars for this release, this cryptocurrency to drop, and well, it turns out he's disappeared with all the money, and investors are looking for their money back. You guys got to be careful out there. You're investing in this such a new market. It's unregulated. No one knows about this stuff. This is new to everybody. People are putting millions into stuff, and they don't even know what they're putting it into. This is a great example of why you need to be careful. Here's an article from CBS talking about fantasy market and the CEO, Jonathan Lucas. According to the New York Post, fantasy market CEO Jonathan Lucas has disappeared with the investors' money and ignored their repeated requests for refunds. Lucas planned to raise as much as $25 million through an initial coin offering that had been planned for December, but was scrapped after the Post raised questions about the deal. Fantasy Market's website has been shuttered and contains messages directing investors seeking refunds to contact the company via email by April 1st, by an April 1st deadline. The company spokesperson denied the Post allegations and said Lucas is working to finish issuing the funds within the next 72 hours. The spokesperson declined to make Lucas available for an interview, saying he was busy with the refund process. I'm sure he's very busy with everybody's millions and millions of dollars with a new cryptocurrency. It's just unbelievable, guys. Be careful out there. We plan to issue refunds since we canceled the pre-sale and have been doing so for some time, a fantasy market spokesperson said in an email. We canceled the initial coin offering because we simply did not raise enough, and it was not economical to continue spending money on marketing. Fantasy Market is planned to sell what it called fantasy market tokens, nicknamed porn tokens, using a cryptocurrency called Ether. So this was a porn token that was going to go off the Ether framework. I don't... Why are you investing in porn tokens? I don't get it. That's weird. It's weird, guys. According to the news site altcoins.com, the company raised $2 million from investors last year, offering users the chance to control what performers said and did during their performances. If you've ever played a video game where you can control your character's decisions, then you are already familiar with the fantasy market experience. Investors who gave fantasy market Bitcoin or Ether will be given their money back in cryptocurrency and not their equivalent dollar value, according to the company. I wonder where this guy is. It's probably not even his name. Jonathan Lucas. Where are you, man? Where's everybody's money? So, this is a great example, guys. Careful with the crypto. Don't let the crypto get you. Don't let that. Don't let the fuss and the excitement that's going on out there make you make bad decisions. Don't do it. Be careful with your money. Be careful. The fantasy token, the fantasy coin is a no-go. So if you invest it out there, let me know. Shoot me an email, john@johncop.org. I'd like to hear your experience with it. Why did you invest, and did you get a refund? I'm on their site now, and it looks like they're still telling people, fantasymarket.com, they're still telling people that that the fantasy market is in the process of issuing refunds. This has been going on for months now, though. But they're saying next 3 to 5 days. But you got to have it in by a deadline of April 1st. So, oh man, guys, I don't know. Be careful. Be careful. All right, that is all. That's all on Bitcoin today. We're not going to talk about anything else on Bitcoin. Anything you guys want to talk about? Shoot me an email. You want to talk crypto? Let's talk crypto. I want to hear from you guys. I'd love to get you guys on the show. Anyone has any opinions, any experts out there that you want to talk about something that you think everyone should hear? Let's talk about it. Shoot me an email. Get a hold of me at SDIRAlive.com. Interested in self-directed investments? You want to look at companies or available investments? Take a look over at SDIRA.org, the SDIRA Marketplace, where it encompasses everything SDIRA, self-directed investing. Very cool stuff over there. Take a look. That is all, guys. I appreciate your time. We will see you here again tomorrow. Same place, same time here, SDIRA Live. Have a good one.